You're with us here in Business Today. I'm Abha Bakaya. Here are the day's top stories. The new year brings fresh buying in gold. The yellow metal is just a few hundred rupees away from its all-time highs as COVID fears spook investors. All eyes on the minutes of the last month Fed meet in order to take direction. Benchmarks end in the red after 2 days of robust trade in the new year. Nifty closed with cuts of just over 1%. Below that 18,100 mark. Sensex snaps a two-day rally, closing with a 600-point cut. Isha Ambani charts an inorganic growth path for Reliance Retail, balances work-life as the company closes yet another acquisition in Gujarat, dares giants like HUL and ITC with her mega plans. Centre extends minimum public shareholding waiver for PSUs for a specified period, irrespective of any change in control. The move expected to boost investor appetite in the said state-owned entities. Retail giant Amazon enters the power generation space, secures a trading license and expands presence in the renewable energy sector. The company will sell wind and solar power on local exchanges. Isha Ambani is leading Reliance Retail on a path of tremendous inorganic growth, targeting acquisitions and smaller FMCG companies across the country. The latest buyout is of Surat-based Socio Hajuri Beverages, a family-owned enterprise with a long-time presence in Gujarat. But as this report details, this is just the tip of the iceberg for the feisty Ambani scion.
These were the scenes outside Karuna Sindhu Isha Ambani's luxurious residence in Mumbai on the 24th of December. The 31-year-old had delivered twins in the US and was being welcomed home by an aesthetic family. Just 10 days later, Isha Ambani seems to be back in action at the boardroom, signing off on a multi-billion rupee deal to acquire 50% stake in the 99-year-old Surat-based beverage company, Socio Hajuri. The brand is deeply entrenched in Gujarat and is the second beverage company to be snapped up by Reliance Retail after Campa Cola. The ambitious acquisition plans were first disclosed by Isha Ambani in August last year.
We invested in acquisitions and partnerships during the year to enter new categories, strengthen our service capabilities, and extend our reach to new markets. We continue expanding our reach to more customers through the addition of store networks and merchant partners. We have accelerated our new commerce initiative, which is powered by the true spirit of inclusion.
Isha Ambani was formally anointed Mukesh Ambani's successor for the retail business of Reliance Industries last August. Since then, the 31-year-old has been on a shopping spree, picking up smaller companies to add to the company's retail portfolio. The first investment in August were the Campa Cola brand from Pure Drinks for 22 crore rupees. The company revealed an all-new FMCG brand independence in November. This was followed by the purchase of Metro Cash and Carry's India business for 2,850 crore rupees. Reliance also picked up controlling stake in Lotus Chocolate Company for 74 crore rupees. The latest deal is the one with Socio Hajuri Beverages. This aggressive expansion led by Isha Ambani clearly has the approval of her father, Mukesh Ambani.
Under Isha, our retail business has grown rapidly. It has emerged as one with the widest and deepest reach in India across all product baskets. Most significantly, Reliance Retail has created over 2 lakh new jobs last year, becoming one of India's leading employers.
Mukesh Ambani has already charted out his succession plan, handing the retail business to Isha, the Jio Telecom business to her twin brother Akash, and the new energy vertical to his youngest, Anant Ambani. As for Isha, despite her added responsibilities as a mother of twins, she has shown her intentions to capture the retail market just like Jio has done to telecom and take on the big players like Hindustan Unilever and ITC. Bureau Report, Business Today Television.
The Ambanis and Adanis are in a rare corporate face-off for the ownership of a thermal plant. Two of the largest business houses in India are in the fray to acquire SKS Power, a Chhattisgarh-based entity which owns a 600-megawatt thermal plant. According to reports, other bidders include NTPC, Torrent Power, Sarda Energy, Jindal Power and the Singapore-based Vantage Point Asset Management. SKS Power owes around 1,900 crore rupees to two lenders, Bank of Baroda and State Bank of India. Bids for the plant were submitted on the 30th of December. Interestingly, Adani's and Reliance have different reasons to clinch the deal. Adani is already in the thermal power business with an installed capacity of 13,650 megawatts. Reliance reportedly wants thermal power to build its green power ambitions. Gold prices extend New Year's gains by edging closer to its all-time highs. The rally supported by a pullback in the dollar and a weak rupee. On the other hand, traders remain cautious as they await minutes from the Fed Reserve's December policy meet. Will this gold rally sustain? Joining us, Vandana Bharti, AVP Commodity Research at SMC Global Securities. Vandana, thanks for joining us. Everyone's been waiting to see this pickup in their precious metal. What are you making of the uptick that we're seeing in gold?
Yeah, we have seen a very wonderful 2022 if we talk about gold, and especially in the domestic market. In international market, we have seen a return of around, say, minus 2% in gold. But yes, in domestic market, because of the depreciation in rupee, it made a profit of around 13%. So sometimes we feel that it is as relevant as it was 5,000 years back, because the bad factors, the negative factors in the market is still there in 2023. Yes, Ukraine-Russia war is already there. We are talking about slowdown. Now we are talking about recession, and the Dow Jones S&P 500 itself, it is giving a negative return of 19 to 20%. So when we talk about recession and all bad news, suddenly gold come in fashion, and because it has safe haven buying, and we take it as an insurance of the portfolio. And we have seen that how even the physical gold, it was important in 2022. Just for an example, like Russia was asking for gold instead of like dollar for crude oil trade. So it is very relevant in current context. And we have seen that there was a fall of around 114 in dollar index, from 114 level to 104. So it is depicting the condition of fragile currency environment in 2023. And whenever we have some shocks in economic shocks and like fragile currency environment, in that scenario, like gold outperformed always. So this year we are expecting that this year in comics, we are expecting of around at least 10 to 12% return in gold. So one should keep on buying on dip. And in domestic market, the rally should continue, because first half of 2023 is expected to be sluggish, as Fed is still stubborn on interest rate hike and for inflation fear. And if we talk about inflation, like whenever we find in general inflation is there in the economy, generally gold perform better than another asset class. So see, in 2022, like most of the equity market, they have given the negative return and inflation was there. In 2023, we are expecting that inflation will slow down, but at least 4.5% inflation is expected till the end of 2023. So this metal will remain very relevant in 2023.
Interesting. So what are the kind of levels we're talking here then, Vandana? You know everyone's going to ask you that.
For 2023, first we should wait for some correction, because the rally is heat up, and we have seen around 15%, 16% return in gold prices in MCX. So yes, one factor is here currency is 85, 84 in 2022, and continuous depreciation, unfortunately, we may see in INR. So it will add on the premium in domestic gold. But yes, one should wait for a dip of around like 50,000, 51,000 in Indian market. In international market, expect a move of around $17.50, $70.60 in gold. But yes, on higher side, we are expecting $22.50 in comics. Simultaneously, if we talk about the domestic gold, MCX gold I'm talking about, it may see a level of around 58,000, because like inflation fear will remain there. Recession is already there, and China is not giving any positive sign on economic front, despite of heavy stimulus and all. And there is a real problem in real estate of China. So till the time these US and China, they are reeling under pressure, this metal will give an edge to the investors.
Great. One last question, but gold versus silver, what would you choose at these levels?
Very interesting. Because in 2022, we have seen that silver outperformed gold.
Yeah.
And after 2012, we have seen first time silver physical demand, it has increased and supply side is normal, very normal. So till the time now, every government, they are talking about clean energy, green energy and EVs and all. So in all those sectors, silver is consumed and we have very restricted supply this time because this is not the commodity which is coming from the main mine supply. It is only the substitute or the other metal which will find along with gold, copper, zinc, bauxite and all. So there is no major mines apart from Mexico and Peru for silver, and recycling is very low as compared to the gold. So we may see supply tightness along with demand is rising here by 4 to 5% in 2023. And the gold silver ratio, we always do the comparison between the gold silver ratio. It is going to improve in 2023, and we have seen a very good rally in base metal despite some hiccups in economy. This time the supply side of base metal is also very on tighter side. Even LME inventories is giving a red signal for that. So yes, if base metals see an upside and gold already we are expecting an upside. So this commodity take the strength from both of this counter, and based on that, we are expecting that this year too, silver may outperform gold. On comics, we are expecting that we may see 32, say $32-$35 kind of level in comics. And if we talk about in INR terms, we may see the level of 80,000 to 85,000 in silver. So definitely one should go for buy in silver as compared to gold. And yes, silver ETF is one of the favorite tool of Indian investors. With just 100 rupees, we can invest in silver. So this is the gala time to invest in silver.
Amazing. Thank you so much for joining us and taking us to the latest on precious metals. Chanda Kochhar could be in a deeper mess as CBI has widened its probe into the loans sanctioned by ICICI Bank to Videocon Group companies. Reports say CBI is now seeking details on 10 more such loans sanctioned to Videocon companies between 2013 to 2016. It has also emerged that RBI's risk assessment report shows that during Kochhar's tenure as CEO, multiple disbursements were approved by the bank for a letter of credit-backed bill discounting despite discrepancies in the underlying trade documents. Reports suggest that Baiju Ravindran, the founder of edtech startup Byju's, is in financing talks to lift his stake in the company to as high as 40%. Reports say the former teacher is seeking funding to finance the stake repurchases by using his shares as collateral. Discussions with shareholders and financiers are still in early stages and may yet fall apart. Remember, Byju's was valued at $22 billion the last time it raised funds, but the buyback is likely to take place, of course, at a lower valuation. Here's what else is making news in the corporate world. Strong debut for Radiant Cash, the stock listing at 10% premium. The IPO received a total subscription of 53%, and the company says the funding will be used to fulfill capital requirements and expansion plans. NCLAT backs CCI's decision to fine Google for abusing its dominant position. NCLAT asks the tech major to pay 10% of the 1,337 crore rupees. The next hearing is scheduled for February 13th on the issue of staying the penalty levied by CCI, and the final hearing is now expected in April. NTPC, in partnership with Gujarat Gas, has begun India's first green hydrogen blending project in Surat. Meanwhile, Cabinet approves the green hydrogen mission, under which the government targets to produce 50 lakh tons of green hydrogen per annum by 2030. Domestic equities continue to trade in a range-bound fashion. What are some of the key triggers fueling bourses? Well, we're falling because of global markets, but holding up because of domestic strength, says Motilal Oswal's Chandan Taparia. Here's an excerpt of his chat with Sakshi Batra.
You know, we are in a range, in a broad range for the market. What will it take for the markets to really break out of this range? Will it be the corporate earnings? Will it be some positive news flows from the budget? What will really help the markets really break out of this range?
So I don't think that there will be the big surprise or big nervousness from the corporate earning. Some of the prices are discounting that, but the key trigger might be the budget. However, this budget is key trigger. As I said, that the last budget of this tenure of the government, and if anything happens related to your corporate taxes, related to your GST, related to your STT, or anything related to the infra boosting or income spending on the agricultures. So these are going to be the key trigger. And I think because of these three key trigger, any decline due to the global market will be bought. So we need to understand that we are falling because of the global market, but we are holding because of the domestic strength. If you notice, in last couple of quarters, FIs were continuously selling, but DIs were continuously buying and supporting the Indian indices and Indian markets. So we believe there is a huge money into the DIs, and that money is likely to hold the sentiment on the lower side. So I think after the corporate earning, the budget will be the key event, which could give a decisive momentum to the Indian market.
But for this year as a whole, if I have to ask you, 2023, most of the brokerage houses have said that, it's going to be another year which could be volatile after the roller coaster ride that we've seen already in 2022. And perhaps it could be a year of no or low returns. What are your thoughts on the benchmarks per se, or on the Nifty Bank perhaps, if people want to stay with the index? What kind of return can they really expect, or is it actually wiser to be going and sticking with the stocks that can actually help you create alpha?
So, Sakshi, when you talk about the generating alpha, then definitely we have to go with the stock-specific activities. And selective stocks have potential to do better than the indices. If I talk about the broader market, I believe it would be tough to generate bigger return, but yes, base of the market is slipping higher. So at least market is all set to head towards the recent highs. That is for positional point of view. I'm not commenting on the immediate point of view.
Sure.
So if you look at the last month, December was down. It formed a bearish engulfing. Usually, historically, January also has the dull momentum where the bounces are being restricted. If I look at the data of last 15 years, but again, due to the budget, and this is a different budget where dips could be bought. So I believe that somehow 17,777 or 17,500 could be the major support. We can head towards 18,500, then 18,881 to 19,250. So these are the levels we are closely watching for this entire 2023.
And the sectors that you would be most bullish on for this entire year, which ones would those be on your top radar?
So, Sakshi, I'll be continue to bullish in the entire BFSI segment. The banking stocks, which really done well, likely to outperform. Your bank Nifty is outperforming and generating the alpha in this market. So, continue to remain bullish in the banking, counter, selective, whether you talk about private or the PSU name. But definitely, I'll go with the heavyweights counter, where I have the margin of safety as well as the chances for the momentum. Apart from BFSI, I will focus on the selective auto name. One can also look at the few metal, however, volatility could be there. But due to the global market, selective metal stocks are likely to continue their rhythm, as we have seen good run up in the last year also. So banking, financials, metal, selective auto, these are the stocks from broader market or indices per se would be on radar to generate the alpha in this market scenario.
A push that can boost privatization of public sector firms. The government has exempted the minimum public shareholding rules for PSU banks and for CPSEs headed for privatization. Currently, companies need to have a minimum public shareholding of 25%. It's now been decided that PSUs being privatized will be exempt from this rule. Let's go across to Karishma Sadani for more on this. Karishma, take us through all the details.
Well, right, Abha, this is definitely going to be a major push for the IDBI bank disinvestment. The center has amended the Securities Contract Regulation Act for strategic disinvestment to exempt listed companies in which the government and public sector undertakings together hold majority stake when it comes to the sale. In fact, this was also much expected. If you remember, just before the IDBI bank sale, expression of interests were out, a lot of discussions were happening if the RBI and SEBI have agreed on the terms of what the DIPAM department has committed to the prospective bidders. So this is one of them, and as per the latest Gazette notification, government can exempt any listed central, state or PSU-owned entity from this 25% cap of minimum public share holding. In fact, exemption shall be valid for the period specified by the government. According to the market regulator SEBI, we all know that a minimum public shareholding of 25% is mandatory, but now going forward, that is going to be on a case-to-case basis, and of course, in the hands of the DIPAM department. This is definitely going to help a lot of PSB, CPSEs, and especially IDBI Bank sale. If you know, the public holding in IDBI Bank sale after the disinvestment is going to come down to 5.28%, which is a majority owned by LIC and government. In fact, early in October, the center had invited expression of interest, the deadline of which has also been now extended to January 7th, where the center is looking to sell a total of 60.72% stake, which is going to be mixed with LIC and government's share.
Thanks for that, Karishma. India's services sector beat economists' opinion as it's recorded its fastest pace in 6 months in December. The S&P Global India Services Purchasing Managers Index surged to 58.5 in December from 56.4 the previous month. Experts predicted an increase of 55.5. This was also the services sector's longest expansion streak, as December was the 17th consecutive month during which it remained above the dividing line of 50. The combined composite index rose to 59.4 in December after manufacturing PMI climbed to its highest level in a year to 59.4. The boom in the services sector and other industries occurred at an unexpected time when record inflation, restrictive monetary policies, and other geopolitical challenges hindered overall economic growth. Amazon, known for its OTT and online retail delivery services in India, will soon be known as an electricity provider. Yes, you heard it right, and our next report is all set to tell you more.
Amazon, the company that delivers packages at your doorstep, could soon be seen delivering you the electricity. In order to trade clean energy in India, Amazon has established a new energy company called AEI New Energy Trading Private Limited that works with Indian energy producing firms. While the US-based company will utilize the energy to power its own operations, there's a chance it may also power your home. The largest corporate consumer of clean energy in the world holds a Category 3 trade license in India. The American company has contracted with private firms to supply it with 720 megawatts of power. Amazon will use this electricity to power its warehouses, cloud services centers, web centers, other operations, and to our homes through local electricity service providers. But why is this billion-dollar behemoth attempting to enter the electricity market when its primary business is thriving? The answer is to target of becoming a carbon-neutral firm by 2040. This would also assist India in achieving its carbon-neutral goal, which was set for 2070. By 2047, the nation also aims to revolutionize power generation through the development of green energy and enhance job growth. So soon, it could be a possibility that our Amazon OTT box is powered by Amazon itself.
Membership ek, khushiyan anek.
Bureau Report, Business Today Television.
That's all we have on the show tonight. Thanks so much for watching.